Hi everyone, thanks for checking in. It's Adam Coburn here at Low & Co Realty, and today we're looking at the Wellington real estate market, analysing all the data for the month of September 2025, comparing it to the last couple of years, seeing what the trends are out there. So folks, overall, look, there's no question the Wellington market is still pretty sluggish. It is improving very, very slowly, very gradually. The overall trends are slowly increasing number of sales. When I say slowly, I mean in the last 6 to 12 months, really slow increases, and decreasing amounts of new stock coming to the market. Again, pretty gradual. But with those two things combined, that's a general improving of conditions overall for sellers. But that hasn't flowed through yet to kind of improving results in terms of sale values, duration to sale, and so on. Yeah, very slowly getting better, but emphasis on the very and the slowly. So message for buyers, there's still relative abundance of choice out there, so get amongst it. And for sellers, as I say, the market conditions are improving, but very, very slowly, and they haven't really translated into results in terms of prices and that sort of thing yet. So let's get into it. Median sale price, $760 for September versus $785 a year ago, down 3%. If you look at the shape of that red line, as I've been saying for about 3 years now, or just over 3 years, the values have been, or median price has been broadly stable for since middle of 2022. You can see there, going into sort of 2023, we were still coming down, but very, very slowly. We recovered a little bit and then coming down again very, very slowly over the last 12 to 15 months or so, but broadly going sideways for over 3 years now. If you follow these videos, you'll know I don't pay too much attention to median sale price because it reflects not just the underlying values, but also the mix of properties sold. I prefer to use the Real Estate Institute House Price Index, which looks at really the best guide into underlying values themselves. So let's look at that. Let's look at that now. I'll start with the league tables. This is looking at the price movements since the nationwide peak in late 2021. Wellington has been the biggest loser, if you like, since the peak. Basically, we dropped fastest, we dropped first, and we've now fallen by over 26% since late 2021 versus 22% for Auckland and just under 16% across the whole country. Over the last year, similarly, we're still the biggest loser, 2.6% down. I mean, the numbers are much smaller. You look up and down that chart all across the regions there, small gains, small losses, relatively small at least. But Wellington still leading the pack there at the very bottom at 2.6% down. Over the last 3 months, I'm afraid to say, pretty much one of the only regions that has fallen over the last 3 months. We are talking really small numbers now though, so it's only 0.5% down. Next month it could be 0.5% up. So, much more stable over the last 3 months, but still a small loss. Interesting looking here at the actual house price index chart themselves. You can see, look, the previous low that we got to after the peak in late 2021 was back in May 2023. So that's 2.5 years ago now. Since then, we saw the market improve as we headed into the election, and then after the election, generally things have deteriorated really, really slowly over the last couple of years. And so the levels that we're at now, 3,200 for Wellington region, is again just below the previous low point in May 2023, which was 3,209, and Wellington City 2,762, just above that previous low point at 2,756. So look, 1 point here or 5 points here or there doesn't really make too much difference. The general theme is, or the general point is, that we are now at levels that we were at the previous low point 2.5 years ago, back in May 2023. So in terms of the Real Estate Institute House Price Index, looking at underlying values, we're at about the same. We're at the lowest point we've been at basically since the peak in late 2021. So looking there across the Wellington results there, you can see that generally Wellington values have been falling slowly over the last year or so, and across the different territorial authorities, Still pretty uniformly weak across all four of those regions: Porirua, Upper Hutt, Lower Hutt, and Wellington City, all in negative territory, ranging from 2.5% down to 4.5% down. So fairly consistent there. Price values falling across all the different territorial authorities. Some pretty strange numbers there coming through for Porirua, as you can see. Look, down 4% in the last month. To me, that's bizarre, and I'm sure there's something funny going on with the data there, so I wouldn't pay too much attention. Let's see what that looks like next month. Wellington City itself, looks like we might have reached some stability in Wellington City over the last 3 months, thankfully, because we've been having a pretty rough time of it all. So it'll be interesting to see where we go from here. But broadly speaking, I would suggest we're bumping along the bottom now. Whether we're up 2% or down 1% or 2% from here, time will tell. But broad theme has been we've been going sideways for several years. We are at kind of a fresh new low point now, but the curve is extremely gently sloping only. So yeah, bumping along the bottom is how I would see it. Number of new listings: 620 versus 615 a year ago, 452 2 years ago. So it's about the same as a year ago. Big increase on 2 years ago. So 2 years ago, though, September 2023, that was the month before the election. And for several months before the election, a lot of the time people think it's a bad time to sell before the election, too much uncertainty. Therefore, the market was starved of new supply. Ironically, that made it a good time to sell. So if you look there at the shape of the red line, you can see September 2023 was basically the low point at exceptionally low levels, way lower even than we saw when we were in lockdown during COVID. So naturally, if you compare the listing volumes to that period, there's going to be more listing volumes than back then. Again, the shape of the graph from that point in September 2023, a big increase as people flooded the market with new listings after the election. That made things increasingly more difficult. Since then, it's been up again, down again, but generally from there has been down. So when you see the red line there heading downwards, that's good news for sellers. When you see it heading upwards, that's good news for buyers. Over the last 6 months or so, it's been a downward trend. So overall, that's good news for sellers. Interestingly, at 620, we are bang on the September average of exactly 620. So, the theme has been new listings falling slightly and back down to normal levels for the month. And there you can see it in a different way. So that's looking at the number of new listings in the month compared to the same month 12 months prior. And so again, the general trend, the theme can be observed by looking at the red line. Saw that massive increase in the spike after the election, or 12 months after the election. Then since then, quite consistently coming down. Overall, if you want a quick rule of thumb, if that red line is below the x-axis, if it's below zero, that's good news for sellers. So it was good news for buyers for some time there over the last 6 months or so. Better news for sellers. Number of sales, 585 in September versus 544 a year ago, 543 2 years ago. So 8% more than 1 or 2 years ago. Again, look at the shape of that red line. We reached low points in late 2022, early 2023. Since then, we've seen gradual, reasonably consistent increasing sale volumes. Over the last 12 months, though, although you can see there it's been a bit of a sawtooth and very slow increases only. So it's still been going up reasonably consistently, but man, it is slow. It is glacial speed. So yes, it's good news for sellers, but kind of only just very, very slow indeed. So, and it's 585, even though sales volumes have been increasing overall, we're still below long-term norms. Kind of within reach, but haven't quite hit them yet. And again, looking at the results there compared to 12 months ago, once again, rule of thumb on this one here, if the red line is above the x-axis, that means overall sale volumes have been increasing compared to a year ago. That is, if it's consistently above the x-axis, which it clearly has been there for nearly about 2 years now, that's good news for sellers. But again, you look at the last 6 months, that red line is only barely above the x-axis, so it's very gradual improvements only. How long is it taking to sell? Still quite a long time, folks. 49 days versus 51 a year ago, 34 2 years ago. Again, 2 years ago, just before the election. As I said, the market was really quite good then because people were assuming it was a bad time to sell. That, ironically, makes it a good time to sell. Over the last 4 months, you see, if you look at the blue bar chart, you can see the duration to sell has been steadily and gradually coming down, but the overall trend over the last 6 to 12 months or so has been an increasing trend there. So are we seeing the beginning of things turning around? Possibly. Hasn't flown through in the 6-month moving average yet though. On to inventory, 16 weeks worth of inventory. We had 16 weeks of inventory in August as well, compared to 15 weeks in September last year and 10 2 years ago. Again, 2 years ago, just before the election, 10 weeks worth of inventory. Much better condition for sellers. And ironically, 16 weeks is only just barely above the long-term normal 15 weeks. It feels much more of a buyer's market rather than that data alone would indicate, and that probably is because over the last 10 years or so, the average has been 10 weeks, not 15. In terms of number of trade me listings, 2935 versus 2808 a year ago and 1914 2 years ago. Again, 2 years ago, it's a big increase of 53% over that level. Back then we were quite undersupplied, or relative to today at least, again, because we were heading to the election. And you can see the shape of the red line there. We've been coming down. That's as we were heading into winter. The spring rush typically would come in September. We've only seen it in October this year, so you can see there that we're at quite a few more listings than we saw a month ago. That's pretty late for the spring rush to hit. And compared to 12 months ago, 5% more listings than we were 12 months or so ago. So in summary, values slightly down versus a year ago. New listings are about the same as 12 months ago and exactly at September norms. Sale volumes are up versus 12 months ago, but still below September norms. And the trend there is in those two bits of data. As I've said a few times here, new listing volumes coming down a little bit, sales volumes consistently coming up. These two things combined are good news for sellers, but we haven't seen it translate into values or duration to sell yet. So duration to sell is down versus 12 months ago, but it is still long, and inventory is above normal long-term levels, only just, but significantly above levels that we've typically seen in the last 10 years. Trade me listings slightly up versus last October, and we saw the spring rush come pretty late in October this year. So as I've said a few times, sellers, the conditions are gradually improving, but this hasn't translated into improved values yet or shorter durations to sell. Message for buyers, yes, there's been a few fewer listings coming to market in the last 3 to 6 months. That might be a little frustrating for you, but the overall amount of choice that you have on the market is there's still relative abundance out there, so get in amongst it. Big thanks as always to Real Estate Institute and to realestate.co.nz for the data. Big thanks to you for checking in, and if you want individualised advice, please reach out. It's Adam here at Low & Co. Have a great month and see you next time.